Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Wednesday, June the 8th, 2011. Well, a continuation of the trend to the downside today, and we have a candle that's made a lower high and a lower low. A much larger red body than the previous day's candle, and that denotes the sellers making a decent amount of net bearish progress on the day between the open and the close, so a fairly bearish candle. The sellers have managed to close the market between the midpoint level and the low, so it means that the sellers have closed this market with control, although they have lost some commitment as the market was testing down roughly towards this region of support around 1275. The low of the candle was actually 1277, but that area of support there is obviously it's had its effect. Not in a strong way, because the sellers were still able to show some commitment to taking this market lower, and the buyers showed no commitment at all and didn't close this market with any control. So the trend is continuing down. We noted previously yesterday that there was potential for a tweezers bottom here, but as with all of the Japanese candlestick reversal patterns, we do require confirmation, and confirmation would have been a higher high and a higher low. Once the low of these two candles from the previous day's trading was taken out, there was no possibility for that tweezers bottom reversal to happen. The tweezers bottom reversal has a fairly good probability of success. This is one that hasn't worked out quite well, although as we noted yesterday with the candle from the previous day's trading, the sellers were in control and the buyers lost commitment. So it wasn't a terribly strong potential for that tweezers bottom. Now, if this market does continue trading down, obviously 1275 is an important area, and we do have good solid support down there. This support extends down to 1265, and after that there isn't much support until we trade down to 1246, so an important time coming up for this market. There is potential to find support around 1275. If we do see support there, then we do potentially have resistance around the 1300 level, and that's that round number where the market has held as support and resistance on quite a few occasions. Above that, we have quite a strong amount of resistance all the way from the bottom of the cloud from 1309, extending up through some previous swing highs and swing lows through the Kijun-sen and Tenkan-sen up to the top of the cloud, extending up roughly to about 1340. So good strong resistance overhead. But once we get through these two levels of support down below at 1275 and 1265, not a lot of support until 1246. Now, in Ichimoku charts terms, everything is quite bearish at the moment. We can see that we have the market trading down below the cloud, so we have an overall negative bias in big picture terms. Trading down below the Kijun-sen and Tenkan-sen, and the Kijun-sen is the pink line, and that represents equilibrium in the medium-term time frame. The market's trading down below there, so we have a bearish market in the medium-term time frame. And trading below the Tenkan-sen, which it represents equilibrium in the short-term time frame, we're trading down below there. Now we are starting to look a little bit overextended, especially in terms of the fast-term time frame. We're trading a long way from that Tenkan-sen, so it wouldn't surprise to see the market attempt to rally up, back up towards that equilibrium level as represented by the Tenkan-sen, the green line. Both of these indicators are pointing down fairly sharply, and we can see from the price action here that we had very, very strong downside momentum over this previous week and a half or so. Just looking at the trend in bigger picture terms, we can see that we have a series of lower peaks and lower troughs, and that's quite a well-established trend. Starting to look a little bit mature, so it wouldn't surprise to see some support coming to the market fairly soon. Now, in terms of the configuration of the Ichimoku indicators, we do have the Tenkan-sen trading below the Kijun-sen, so that reinforces the bearishness that we're seeing in the market, and the Chikou span here is trading below the corresponding price action. So we do have confirmation of the negativity in the market once again. So quite a bearish market, but starting to look a little bit overextended. 1275 is an important area for this market over the next day or so.